What if refinancing felt like financial freedom, but secretly, it was the trap all along? Today, we're talking about the kind of debt moves that look smart on paper, but can quietly wreck you. And yes, real people have made these mistakes. Let's start with the big one: federal student loans. When you refinance federal student loans into a private loan, you don't just change your interest rate, you permanently surrender income-driven repayment, forgiveness programs, and deferment protections that no bank will ever give back. Think of federal student loan benefits like a golden parachute sewn into your backpack the moment you refinance. You cut it out and hand it to a lender who has absolutely no incentive to ever give it back. We're talking about programs worth potentially tens of thousands of dollars in forgiveness, gone in exchange for a marginally lower rate. Now let's talk about low interest or zero interest promotional debt, the kind that furniture stores and car dealerships love to dangle in front of you. Refinancing that into a personal loan or rolling it into a home equity line sounds clever until you realize you've just turned a temporary 0% deal into a decade of interest payments. The behavioral economics here are fascinating and a little embarrassing. We are genuinely wired to see consolidation as relief, even when the math is screaming at us to stop. It's like paying someone to carry your luggage 3 feet to the left. Technically it moved, but nothing actually got better. Here's where it gets historically interesting. Debt refinancing crazes tend to spike during periods of falling interest rates, and suddenly everyone becomes a self-proclaimed financial optimizer. But the people who quietly got hurt were the ones refinancing short-term debts into long-term obligations, stretching a 2-year problem into a 15-year one. The pattern is almost poetic in its predictability. Cheap money arrives, confidence surges, and people trade flexibility for the illusion of savings without doing the full math. Every cycle, the same lesson gets relearned by a fresh batch of borrowers who swore they'd done their homework. One massive misconception is that a lower monthly payment always means you're winning, but a lower payment on a longer term can cost you double in total interest over time. You didn't save money, you just spread the pain out so thin, you stop noticing it. Another debt you should think twice about refinancing is any loan with prepayment protections or borrower-favorable terms baked in, like certain small business administration loans. Refinancing those can trigger fees, strip legal protections, and remove caps on variable rate increases that were specifically designed to keep lenders from burning you. So what's the practical playbook here? Before refinancing anything, run the full amortization, not just the monthly payment, and ask yourself whether you're trading long-term costs for short-term breathing room, because those are two very different transactions. Discipline means knowing when not to act, and in debt management, inaction is sometimes the highest IQ move in the room. Position, size, and patience matter more than chasing a rate drop that saves you $40 a month while costing you 5 years of financial flexibility. There's something almost philosophical about that. It's not just math, it's a relationship with your future self. And refinancing is essentially renegotiating the terms of that relationship, sometimes in ways your future self will absolutely not appreciate. The best financial decisions aren't always the ones that feel the most productive. Sometimes the best move is to hold what you've already built. If you've got federal loan protections, promotional zero interest deals, or borrower favorable terms, treat those like rare assets because structurally they are. Refinance with urgency only when the numbers and the terms, not just the monthly payment, genuinely improve your total position. And honestly, the fact that you're even asking which debt to refinance means you're already thinking at a level most people skip entirely. That awareness, paired with a disciplined strategy, is the actual edge. Whether you refinance or hold, comfort comes from knowing you made a rational, informed decision rather than an emotional one. If you're ready to take the next step, whether that's real estate investing, home contracting work, or finding the right lenders, check out our links in the description below and let's get you started.